Part B, calculation. 1. Analyze the net working capital for 2024. Net working capital formula is net working capital equals to current asset minus current liabilities. For SDS Group Berhad, RM 193,421,000 minus RM 44,019,000. Balance is RM 149,402,000. And the Oriental Food Industries Holding Berhad net working capital is RM 204,440,541 minus RM 54,453,948 equals to 149,986,590.
Nama sejahtera kepada Puan Marsita binti Abdullah. Nama saya ialah Sri Varum Analaki Munusami. Nombor pendaftar saya adalah 10 DAT 22F2002. Saya dari kelas DAT 4A. Bagi hari ini saya nak terangkan untuk Part B dengan Part C. Part B untuk saya nak kirakan net operating cycle for 2024 bagi company SDS Group Berhad dan juga Oriental Food Industry Holding Berhad. Dan juga Part C adalah question 4 saya akan terangkan. Jom. Part B, calculate the net operating cycle for 2024 bagi company SDS Group Berhad. Net operating cycle formula days sales of inventory plus dengan days sales outstanding. The formula net operating cycle equals to 365 days divide with cost of goods sold times with average inventory and plus with the 365 days bagi dengan sales or revenue darah dengan average receivable. Okey, bagi ini kita nak carikan first average inventory. Kalau nak cari average inventory, first opening inventory plus dengan closing inventory bagi 2. So dalam company SDS Group Berhad, dia punya opening inventory adalah 8597000 plus dengan 7339000 bagi dengan 2. Kita selepas tambah kita dapat 159360000 3 kali bagi dengan 2, jawapan dapat 7968000. Seterusnya kita kena carikan average receivable. Average receivable ini kita nak first opening receivable plus dengan closing receivable bagi 2 untuk bagi dapatkan average receivable. So bagi opening receivable adalah 13,134,000 plus dengan 11,131,000 plus lepas tu bagi dengan 2. So kita selepas plus tersebut angka tersebut kita dapat 24,265,000 bagi 2 dapat 12,132,500. Lepas tu kita gunakan net operating cycle selepas kita dapat average receivable dengan average inventory. So first 365 days bagi dengan 214,009,000 darah dengan 7968000. Lepas tu plus dengan 365 days bagi dengan 324,063,000. Lepas tu darah dengan 12,132,500. Selepas tu kita dapat 13.59 plus dengan 13.67. So jawapan kita dapat 27.26 days. So kalau kita gunakan dapat 27 days. Seterusnya bagi company Oriental Food Industry Holding Berhad. First, saya katakan net operating cycle kita dapatkan days sales of inventory plus dengan days sales outstanding. The first formula net operating cycle 365 days bagi dengan cost of goods sold darah dengan average inventory lepas kurungan plus dengan 360 days bagi dengan sales or revenue darah dengan average receivable. So bagi kita normally biasa kita average inventory opening inventory plus dengan closing inventory bagi 2. So first 53172093 ini opening inventory, closing inventory 50481447 lepas plus bagi 2. So lepas plus kita dapat 104193540 bagi 2 kita dapat 52096770. Lepas tu account receivable. Account receivable average account receivable. So first opening receivable tambah closing receivable bagi 2 921880006 plus dengan 69715747 bagi dengan 2. Kita kena tambahkan 2 angka tersebut atas. Lepas kita tambah, kita dapat 161,903,753 bagi 2. So kita dapat 8095,1876.5%. So lepas tu kita gantikan dengan N operator sebagai formula 365 days bagi dengan 342573,298 darah dengan 520,96770. Lepas tu tambah dengan 365 days bagi dengan 431723,546 darah dengan 80951876.5%. Lepas tu kita dapat 55.51 days plus dengan 68.44 days. So total kita dapat 123.95 days. So answer kita dapat 124 days.
Greetings to Puan Mashita binti Abdullah. My name is Tan Shuet Sam and my metric number is 10DAT21F2007. Part B. Calculation Accountability. Question number 3. Calculate cash conversion cycle for 2024. Formula for cash conversion cycle is days sales of inventory plus days sales outstanding minus days payable outstanding. Alright, before we calculate cash conversion cycle, we need to find average payable first equals to opening payables minus closing payable divided by 2. And then later, we need to find days payable outstanding equals to 365 days divided by cost of goods sold times average payable. And then after that, we include them in cash conversion cycle. Okay, calculate cash conversion cycle 2024 for STS Group Berhad. For average payables, we get RM 23,501,000. And then later we need to include it in days payable outstanding formula. And we get 40.08 days. After that, we find cash conversion cycle by using the formula and we get total negative 13 days. Meanwhile, calculation cash conversion cycle 2024 for Oriental Food Industries Holding Berhad. For average payable, we get 27,456,859. Later on, we need to include it in days payable outstanding formula and we get 29.25 days. And then total for cash conversion cycle for Oriental Food Industries Holdings Berhad, we get a total of 95 days. Decision making. Question 1. Compare the value of cash conversion cycle of each company and decide whether the cycle is reasonable or needs to be improved. The cash conversion cycle for STS Group Berhad is 13 days and Oriental Food Industries Holdings Berhad is 95 days. The cash conversion cycle for STS Group Berhad is slower than Oriental Food Industries Holdings Berhad, where a shorter cash conversion cycle is better than the longer period. Which means STS Group Berhad is operating more efficiently and takes a shorter days to convert cash into inventory than Oriental Food Industries Holdings Berhad. It is important to note that cash conversion cycle is not a significant consideration for Oriental Food Industries Holdings Berhad, and the company needs to reduce their days inventory outstanding and their sales outstanding. The inventory Food Industries Holding Berhad needs to increase days payable outstanding, which will help to sell the inventory faster and can collecting payments early with customers. So Food Industries Holdings Berhad can give various discounts for early birds, especially those who make the payment faster. This will be the one of the greatest decision for attract customers to make payment early. Oriental Food Industries Holding Berhad can improve their cash cycle and can control their accounts for running their business more efficiently, such as SDS Group Berhad.
By several ways. A. Collect inventory into sales faster. The longer it takes for a business to sell its inventory, the longer the cash conversion cycle is. Business must sell their inventory efficiently, building or purchasing only what they need and using all the tools to keep the cash conversion cycle to keep manageable. Whether a company deals with a raw material or finished product, it should have an aim to have only what it needs readily available. Adopting a fixed reorder system is advisable. B. Encourage quick payment from customers. How quickly customer pays directly impacts to our cash conversion cycle. Encourage customer to make earlier payment is an effective way for reducing cash conversion cycle. Requesting upfront payment or ask customer to make deposit can be an option. Companies can punish their customer for late payments. Encourage customers by offer temporary discounts for early payments and provide better credit terms for customers who consistently pay upfront on a time. Extend the time taken to pay suppliers. It's beneficial for customer to pay a business immediately, but it's not necessarily beneficial for company to pay their vendors immediately. Companies should avoid sending invoices early. It's extending your DPO, ratio of the average number of days it takes for a business to pay its vendor over a certain amount of time. So from this we can shorten our cash conversion cycle. D. Adjust accounts payable period. Another effective strategy is optimizing the length of account payable outstanding. This provides additional time to receive payments, increasing flexibility and shortening the cash conversion cycle. Setting up bill payments on a longer cadence and say 45 instead 30 days give your cash conversion more room to breathe. Question 3. A. Avoid overstock. While you want to make sure you have enough inventory on hand to meet the demands of your customers base, you also want to make sure that you do not have too much inventory on hand. Overstock may mean that you end up having goods go back before they are purchased, which can mean financial losses for your business. Often you will end up selling off overstock at much lower prices, which can lead to financial losses. B. Manage working capital. Many businesses, especially small businesses, often struggle with working capital. When you purchase stock, you have the expectation that the stock will sell within a reasonable period, allowing you to keep that steady flow of capital through your business. Maintain your supply chain. Part of the inventory control process is ensuring that you have adequate level of inventory stages, including raw materials and the materials needed to help keep your business running effectively with adequate inventory control measures. You can ensure that you have a supply chain in a place that will allow you to keep up with the needs of your business. D. Manage customer demand. If you do not have the stock on hand to manage the needs of your customer, you will miss vital sales. Not only that, but decreased inventory may also cause your customer to seek out their needs elsewhere, and in some cases which may mean that your customers stick with that new business rather than return to you.
Part C. Question 4. Explain the collection method and procedure that can be used by company in managing of their account receivable. The first step in managing account receivable to establish a clear credit policy. This involves defining the criteria of extending the credit to customer and including the credit limits and payment terms. The policy should access the credit worthiness of potential customers through credit check and establish terms such as payment due dates and discounts for early payments and penalty for late payment. A well-defined credit policy helps to minimize the risk of bad debt and ensure that credit policy only extend to reliable customers. The second is invoicing procedures. Efficient invoicing extends for timely collection. Companies should ensure that invoices are accurate and clear and sent to properly after goods or service are delivered. The invoice should include all relevant details such as the invoice number, due date, itemized list of goods or service, and payment instruction. Implementing an automated invoicing system can help streamline this process, reducing errors and ensuring the invoice are sent to time. Regular follow-up on the overdue invoice can also be automated to ensure consistent. The third is collection strategy. Effective collection strategy are key to managing receivable. Companies should employ the structure of approach to follow up the overdue accounts. This can include the sending reminders and statement, making phone calls, and negating payments plans if necessary. Establishing a system for tracking outstanding receivable and prioritizing collection based on the age of the account receivable can help focus effort the most overdue accounts. A regular review of accounts receivable again reports can help to in identifying the possible issue clearly. The fourth is customer relationship management. Maintaining a good relationship with the customer can significantly impact the collection process. The company should engage in this more active communication and addressing any disputes or issue properly to avoid delay payments. Building strong relationship to regular the interaction and providing excellent customer service can encourage timely payment and foster the loyalty. Offering the flexible payment option or terms band feasible can improve the collection rates. The five is internal control and review. Implementing strong internal control conducting a regular reviews of account receivable process are essential for effective management. These include ensuring that are clear procedures for handling receivable and segregating the duties to prevent fraud and monitor the effectiveness of collection process. Regularly review account receivable reports are metric can help identify the trends and areas of improvement. Periodic audits of the receivable process also ensure the compliance with the company policy and equity requirements. That are for me. Thank you.